Hello to all traders and welcome back to another market review brought to you by Orbex. So big moves on gold and dollar across the board in yesterday's American session after Fed Chair Jerome Powell did state that the Fed are open to still raising rates quite aggressively for the remainder of this year. But it won't probably be the 75 basis point hikes that we've seen for most of last year. It will probably be between 25 and 50 basis points. But the important thing to note is that they will keep most probably piling on the pressure on interest rates as inflation does stay worryingly high. You know, this 2% inflation target that they have by the end of the year doesn't look likely that it's going to come into fruition, so interest rates will keep on pushing higher. But the important thing to notice is as well that there is no terminal rate being addressed. It was supposed to be roughly about 5%. We are approaching that quite significantly, but 25 to 50 basis points hikes until the end of the year will probably push it over that kind of target as well. So we saw gold collapse quite significantly back down to the 1800 handle. Dollar was pushing across the board. We've had the big FX players such as Euro dollar, cable, dollar CAD, dollar yen as well, moving over 150 pips each. So quite big moves in the market, good opportunities. And where are we going next? Well, we'll look on gold first of all today. As I said, we've had a 2-day collapse in gold. Today it started off on a bearish candle. At the moment it is slightly bullish, but it does have quite a lot of pullback to begin with. So at the moment on the daily chart, we're just looking now that since the last round of NFP and PMI data, which was this collapse here at the beginning of February, we've seen obviously moves to the downside. We've had a slight pickup now in correction, but now are we moving even lower to break this particular area of just over 1800. It has been quite a favorable support for bulls in the near term, but in the long term we're looking like it could actually break this particular barrier and start falling lower. So where do you see gold going? You let me know. We haven't really seen many divergences on the RSI at the moment, especially on the daily chart. I'm not really using any other indicators at the moment. We're just looking full technical on the chart patterns. So we'll bring it down to the 4-hour chart at the moment. And what we're just seeing here is, as I said, we have had a bit of a collapse in recent periods, but we are seeing now this recovery to the downside for bears especially. So we're just going to see if there's going to be that kind of support again, roughly about the 1806, 1807 area. Obviously the 1800 is a big psychological level for a lot of economists and traders alike, so that we are waiting to see if we're going to have another move down, but that will all depend on if we can break this particular support area and then start moving a little bit lower. So roughly about the 1807 mark would be quite significant for a few traders to see where the next signal is going for gold. Obviously, you know, the Fed does play a big part in this, and we've got the NFP numbers coming up on Friday, which gives us more of an indication that even though only 200,000 new jobs are expected to be added compared to the last big shock that we saw, over 500,000 jobs being added, it does give the impetus that America is on the front foot in recovering from not only COVID, but obviously the fallout from the Russia-Ukrainian conflict as well, which still goes on, unfortunately. So just let's look on the euro dollar, because as I said, the pound dollar and dollar yen, these kind of currencies, they have all been falling quite significantly in favor of the dollar. But what's more likely at the moment, we've seen what wasn't on gold was a slight divergence on the RSI. Currently we're seeing a slight bullish divergence, which could start picking up prices quite nicely, because unlike gold, we've seen this kind of more intense support roughly about the mid 105 handle. This wasn't really too much of a big correction at the moment, so we could see another slight pickup in prices. We are expecting a slight consolidation for this trading session, but we could be surprised by more data coming out in the next 24 hours as well from America. So we've got another testimony today as well from Fed Chair Jerome Powell. We'll see if he has another spanner in the works, so to speak, if it's going to start playing out for the dollar and where it's going to go to next. So technically we're just looking at the moment, if we just remove the drawings, remove the divergences, because we just looked into that. Obviously, unlike gold, we have actually cracked this previous support that we saw, and now, as I say, we expect a little bit of consolidation for the next trading session up until roughly about 5 p.m. GMT time or 5 to 7 GMT time, when Fed Chair Jerome Powell obviously releases his statement, his testimony, and then we'll see how the markets are reacting as well. So just keep an eye out for that as we see, as I say, a slight consolidation before this 150 pip move to the downside does get a little bit of a reversal, but we'll see how much of it will be in the near term as well. So day by day, obviously, fundamental news event by fundamental news event, we're getting more and more information on where the dollar is heading and where gold is heading. Two big players in the market, and obviously we'll keep you updated on our Telegram and YouTube channels, and feel free to get back to us with what you're trading on and what your expectations are as well for these next commodity movements. So thank you very much for joining me in today's video, and we'll speak again next time. Bye for now.